welcome. You're tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma, and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. And don't forget that today is Friday, and we're going to be getting you Buy Now, Sell Now Pathshala as well. So it's a learning day, but before that, let's have a look at what the markets are up to. So Cheryl, a complete reversal after the start. Both the benchmark indices are absolutely trading flat as of now.
Absolutely. A very good morning to you, Shrishti. We did hit a record high levels when the market is actually open for trade this morning. But from there on, we've given up some of those gains. And we're actually struggling to hold on to the positive territory. If you look at it, we have seen quite a lot of dips in between. Talking about Nifty Bank moving in tandem with the benchmark indices, while the advanced decline ratio for now is skewed in the favor of the gainers. Talking about the list of gainers, then you have Dr. Reddy's as the top Nifty gainer today, along with Wipro, Cipla, Titan, as well as HDFC Life. While on the flip side, it is Bharti Airtel that's under immense pressure. 1.5% gone for Bharti Airtel. That could also be a reflection of what exactly is happening in Vodafone Idea, because that's the opposite move coming in for Vodafone Idea, given the fact that the board is going to meet soon to consider fundraising proposals. Also, you had Kumar Mangalam Birla yesterday say that they remain committed to Vodafone Idea. In fact, they remain as committed to Vodafone Idea as earlier. So that's Vodafone Idea for you, 8.9%. And the fact that Vodafone Idea is looking at going ahead and resolving their issues, or at least for a fundraise. You can see Indus Towers also seeing a similar move. That one also is seeing an uptick in today's trading session. Remember that any resolution or the fact that there is a funding for Vodafone Idea, it will all go well for Indus Towers. Coming back to the Nifty losers then, BPCL, Asian Paints, Power Grid and NTPC are the other set of losers. So that's the way how the markets are looking like at this point in time. But yes, like the way Shrishti said, it's Friday. It's a learning day for all of our viewers. Buy Now, Sell Now Pathshala. And yes, we have Kunal back for us to take us through the Buy Now, Sell Now Pathshala. Kunal, all of our viewers have been asking one question every day. Hopefully that question also is answered with you appearing for BNS and Pathshala now.
Well, absolutely, yes, Cheryl, and it's always great to come back for Pathshala. Now, the topic which I've discussed today is very interesting, and the charts, the second chart specifically, is something which could probably give an insight on how the trends for indices as well as technical patterns shape up. So the topic for today is double bottom formation. Very critical pattern, because when the markets or the asset classes go into a phase of correction, it's very, very essential to understand that how stocks form bottom, how much time they generally take to form a bottom for themselves, and what happens when the rally starts off. So we look at a very primary example of how a double bottom pattern shapes up. Assuming our trend of the stock is going down, so which means during this black line, the stock is actually going into a downward trend. All of a sudden, post a certain level gets breached, the stock forms a bottom for itself, goes into a phase of a rally, and this is a double test of the bottom. So both in terms of the time spent, so the time spent over here is much higher as compared to the time spent at the double bottom, which is a bit shorter as compared to the previous time, and then the stock forms a double bottom more or less at the same levels for itself. The breakout happens, the previous highs get breached for the stock, and then on the retest, the stock retests this neckline to start off a strong confirmation that this becomes a very strong and a solid support in the entire scheme of trend for the stock, and then starts off a very strong uptrend. So we call this as a classical double bottom formation, where the stock forms a double bottom pattern, goes into a breakout, retests the neckline, and then starts off an uptrend. We look at one chart which has already confirmed a double bottom, and the second one is a more recent one, which could probably be a good indication of how trends shape up for the index. So this is the IT index. Over the last 1 to 2 years, we've seen what happened to the IT index from 2021-22 top, where it formed a major correction from almost 38,000, 39,000 levels to a point when it was almost at 27,500 approximately. This is the classic case of a double bottom. The index formed a retest of the previous lows, got into a breakout, and then a retest of the previous neckline breakout for this double bottom formation, and then started off a major massive uptrend. And this is just September 2023 lows for the IT index from 30,000. We are already at 38,000 plus levels for the Nifty IT index. So this is a classical case of how double bottom shape up. But we look at one more chart which is very recently formed a double bottom pattern, and that's the Bank Nifty. So as you can see, over the last 2 months, the banking index from 49,000 approximately fell down to as much as 44,500, 45,000 levels. a double bottom pattern over here for the banking index, a breakout which we've seen recently, a retest of the neckline. So as you can see, yesterday's low was almost like a retest of the neckline. If you can look at this in the line charts, it'll be much more clearer. And now we are on course of coming back towards a breakout mode for the Bank Nifty. So this could be a classical case where the Bank Nifty could form a double bottom formation, a rally, a retest of the neckline, and then possibly a start of a very strong uptrend.
All right, so that's the learning on the double bottom pattern. Thank you so much for that, Kunal. And like you were highlighting Bank Nifty, just to highlight that the Bank Nifty has now once again come back to the green territory and now holding up gains of almost 150 points. But with this, viewers, apart from the benchmark indices, a lot of stock-specific action, and let's shift focus to the stellar move that we are witnessing on Jio Financials. The company's market cap has surpassed 2 lakh crores, and these are the levels that we are seeing for the first time in Jio Financials. So let's go across to my colleague Ankur to understand this better. Yes, my colleague Ansh is joining us to give us all those details.
Right, so Jio Financials is up around 8% in trade today. In the morning, it was up by around 15%. Let's look at few data points. The stock has been advancing for 5th consecutive session, and it has also touched the record high level today. The stock has gained over 30% in last 1 month itself. Also, today's buying was with strong volumes, which was around 4 times as compared to last 10 session average trading volume. Additionally, it's trading above key DMA level. Now, very importantly, if we talk about market cap, it added around 15,000 crore, taking it higher to over 2 lakh crore for the first time.
So much for that, Ansh, for outlining the key datas or metrics when it comes to Jio Financial. Yes, that particular counter is soaring away in a trade today. But on that note, we slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll start taking your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Viewers, you can write to us on the WhatsApp number that's flashing on your screen. Mention your name each time you write to us. Mention the stock name that you're looking to invest in. If you're already invested in the stock, mention the buy price, the quantity, as well as the time horizon. In that way, our experts will be able to help you better. And talking about our experts, today we have Kunal Bothra, who's back, as well as we have Avinash Gorakshekar on the show. Very good morning to you, Avinash, as well as Kunal. Thank you so much for joining us on ET Now. And let me first start with a short-term query, given the fact that Kunal has been actually has returned to the show after almost a week or so. So, Kunal, for you, Subramanian from Chennai, he wants to know whether he can buy IDBI Bank or IDFC First Bank at the current levels for the short term. Between both of them, which one do you think looks good? Because IDBI Bank, no doubt, it's a PSU bank, but also we need to also think about the fact that it's always been in the news for privatization, isn't it? Well,
absolutely, yes, Cheryl. So, there are 2 points over here. And trust me, it's a very difficult question to answer because IDBI Bank forms part of the PSU cluster, and we've seen what's happened to the PSU stocks in the last 6 months to 1 year, and there is an expectation that possibly the PSU stocks can get into a major multi-year rally even from current levels. So potentially IDBI Bank can also be one of the few banking names, PSU banking stocks, which can continue to move up higher. Of course, if the news flow regarding the disinvestment doesn't hamper the stock price trend on an immediate basis. But on the other hand, IDFC First Bank is also an interesting chart. Now, the pure reason for that is because the stock in the last, I think, 6 or 8 months has gone through a consistent correction from, I think, at one point hitting that 100 mark towards the point when the stock had come back to that sub 75, 77 levels, currently at 80 plus mark. So I would believe IDFC First Bank is positioned quite well in terms of a risk reward play. Whether the stock would immediately rally or not, that's a bigger question mark. But I think from here,
although one can clearly say that competition in the paint market is now going to get more intense. Now Grasim has announced a very major expansion in the paint market. But Berger, considering the kind of geographical reach and the kind of market share it commands, I would suggest that rather than 6 months, keep a time frame of at least 8 to 12 months. I think with benign crude prices, profitability is expected to improve in the coming year. So continue to hold, but I think keep a time frame of at least 8 to 12 months and stay invested.
One is coming from Anupama, who's writing to us from Abu Dhabi, and this one is for you, Kunal. She's saying she's a big fan of you and she wants you to answer this query. She has 300 shares of City Union Bank at a price of 165 rupees per share. She is currently suffering a loss in this particular counter, so she wants to know what should she do, exit it or stay put with it to recover.
First of all, thank you so much for that. I actually did a very detailed analysis on City Union Bank some time back, and whenever the bank Nifty apparently has done exceptionally well, City Union Bank has been one of the key candidates which have performed quite well over the last many years, and I'm talking of a data which flags off I think from 2009-10 approximately, so almost a 10 to 15 year data point for a stock like City Union Bank. It's just that in the last 1 year or 2 years the stock has lost its mojo and is now somehow going to a more of a time-wise correction rather than a major price correction. But I would believe that at current levels of 130 approximately for City Union Bank, it could be a good territory to try and add on to your holdings further. Maybe look to average out and try and bring your cost price lower. Very difficult to time again that whether the stock would pick up on an immediate basis. But when I look at the historical data over the last 10-15 years, it could just be a matter of time that when the Bank Nifty starts to get into a very big uptrend and as well as a momentum mode, City Union Bank can stand to outperform as well as perform in line with the Bank Nifty.
All right, moving on to the next one. And Avinash, if someone has to choose between Samvardhana Motherson and Motherson Sumi Wiring for the 3 years investment horizon, which stock would you bet on? And also indicate any price range or any entry point for the same. This query is from V. Ravichandran. Sorry.
I think Samvardhana Motherson would be a better bet, considering the fact that it's a larger player, in the automotive component market, and it not only has a domestic but even a global market. So I think this stock has been consolidating for a long time. So I think if the investor has a 12 to 15 month kind of time frame, I would suggest that he can even buy at the current odd levels. Keep a medium term time frame of at least 150, and I think keep a time frame of 12-15 months. But better numbers can be expected in FY25. FY24 has already started on a good note, but FY25 should be a lot better.
All right, this one is coming in from Pavitra, who's writing to us from Bangalore. She wants to know about Yes Bank. She's already facing a huge loss. Purchased it at 31 rupees per share. She wants to know whether she should hold or exit this particular counter. Actually, Kunal, when was the stock last at 31? I think a few months ago or so. Okay, 6 months, almost 6 months ago maybe. Or maybe 2-3 months ago. I'm sorry. What should she do now? Because she's got Yes Bank at a very elevated level, given the fact the way how the stock has been moving over the last few years, isn't it?
No, in fact, you'll be surprised. The 31 level was actually hit in 2020 for Yes Bank. I think it was almost 31, 32, mid of 2020, June, July 2020. Post that, the stock had actually gone to even 10 or 11 odd levels, and then from there it's now getting to a recovery. Now, yes, you've bought Yes Bank at the more higher end of the price curve, but I would believe that there is still a strong chance as well as a case that the stock may get into a recovery. Now, what has happened is in the last 1 month, the pace of rally has intensified for Yes Bank. The volumes have been exceptionally high for the stock in this last 1 month because on an average volume for Yes Bank was around 15 crores to 16 crores on a daily basis on the NSE. And in that 3-4 days of strong spike into the stock price, the average volume had jumped up to 10 times for the stock price, which means that there has been some serious buying which has happened for the stock. And right now it's going through a phase of mean reversion. I would actually believe that maybe closer to 25 levels, say plus or minus 50 paisa for Yes Bank, could actually be a very good territory where you will look to average out further and trying to reduce your cost price.
All right, Avinash, the next query is on RVNL. So Sheila is holding more than 350 shares at a price of 156 rupees. Any long-term targets that you have on this one?
I think RVNL definitely will continue to grow. It's a stock where I think you can play the railway theme very well. The investor has made a decent amount of money, so I would suggest that if the investor can hold on for the next 12-18 months, targets of even 312, 320, 25 are very much possible. But I think you must understand that this is not a quarter-on-quarter business. Previous quarter for RVNL was quite disappointing. So I think if the investor has a long-term view, then only I think continue to hold. At least keep a time frame of 12 to 15 months. That would be the strategy for keeping invested in RVNL.
This one is coming in from RS Moondada, and he has 300 shares of GFL Limited, which is an Inox subsidiary, at about 98 rupees per share, and 50 shares of TD Power Systems at 305 rupees per share. Avinash, let me take this to you because Inox GFL, I believe, is a fairly recently listed counter. I don't think Kunal will have data for that. What should Ms. Moondada do with his holding? One is TD Power System, the other one is GFL Limited, that's the Inox subsidiary.
No, I think as far as GFL is concerned, I think continue to hold. I think it's a Inox Group company doing pretty well, has a very decent order book, and I think we could see better numbers for FY25 also. As far as TD Power is concerned, see, they are into the transformer segment, and I think both the power distribution as well as the transformer segment has been doing pretty well. Numbers also for TD Power have been quite encouraging. So I would believe that not only this year, but even the coming year should be quite stronger. So I think in both these stocks, the advice would be to at least keep on holding for the next 6 to 12 months.
Coming to you for the next query, this one is specifically for you, coming from Sitaram Ganesh. And which one is better amongst Maruti and M&M for an entry at current market price? And if one should make an entry at current market price or wait for some more dips?
Well, very, very tough one, frankly, because both the charts are looking attractive. So I would, I would actually believe that it depends on your positioning. Now, if you're looking to, so there are traders, there are investors who are looking to buy fresh stocks which have gotten to a breakout from a sector, and for example, for stocks which have been huge underperformers. I think in that case, Maruti could probably fit the bill quite perfectly. The stock had gone through a huge underperformance, almost like a 5-6 years of underperformance from 10,000 levels to a point when the stock had corrected 30-40% also. So right now it's at 11,500-600 mark. But I would still believe that this could just be a starting move for a stock like Maruti, and the stock can gain up at least another 25-30% in the next couple of years. M&M on the other hand has been a phenomenal performer over the last 2 years, from 700 levels to now on the verge of hitting the 2000 mark. So the short-term prospects for M&M also look attractive. So very, very difficult to try and pick and choose just one out of the two.
All right, this one is for you, Avinash, because we have Ajish who's writing to us from Kerala. He has, I think he's already holding about 1,000 shares of ABFRL. Now he wants to know whether he should invest a huge lump sum amount, say around 10 lakh rupees in ABFRL for the long term. Do you think it's an advisable move to put that lump sum amount only in one particular stock, and that stock being ABFRL?
Yeah, I think my guess is that in this kind of market, it always would pay much more richer dividends if you do an SIP rather than putting a lump sum amount in any stock. So I think, if the investor has decided to get into AB fashion, it's definitely a good long-term bet. But rather than putting a lump sum, I think it's better that he observes the market and, takes advantage of the volatility and, does a SIP every month. Depends on, what kind of money he wants to put in at every tranche. But I think that would be a better strategy rather than putting a money in one lump sum.
Moving on next, and Kunal, the next query is from Ved, and he has his query on 3 counters: HDFC Life, APL Apollo, and VIP Industries. His question is, are these stocks at the bottom, and are these stocks at a good entry price, giving a good entry price point? What will be your advice?
So all 3 charts are looking attractive, but the only concern which I have with one of the stocks is HDFC Life. Now, even though the stock is forming a double bottom of sorts on the charts, the only concern which I spot on the charts is the falling slope, or the sharp slope of the falling average for HDFC Life. And I'm talking of the 50-day moving average, which is falling a bit more sharply, which means that the stock has to really do quite well over the very immediate term to try and surpass this rising slope of a major moving average for HDFC Life. So for example, if the stock comes back to say 600 mark or 620 levels, say in the next 1 or 2 weeks, then there could be a strong case that maybe the stock has formed a major bottom for itself and could be a classic time to buy these stocks. The other names which you mentioned, APL Apollo as well as VIP Industries, I think both of the charts are a lot more stable and you can consider buying these stocks at current levels.
All right, on that note, we'll actually slip into a break in this edition of Buy Now Sell Now. When we come back, we'll continue taking your query, viewers, so don't go anywhere.
Welcome back to Buy Now Sell Now, show where we get you answers for all your stock related queries. And for the next query, Kunal, I'm coming to you. This query is from Mali, and he's holding Nestle India 130 shares from a price of 2750 rupees. Should he just go ahead and book loss in this one and rather buy HDFC Bank and Bajaj Finance at current market price? What will be your advice?
Well, of course, the options are a lot more tempting, where HDFC Bank as well as Bajaj Finance have come back into a corrective phase. But I think the answer for that would probably depend on the overall construct of your portfolio. So if you already have, for example, stocks from the banking names as well as the NBFC pack as such, then I would not, I would not suggest a swift or a shift from Nestle towards either HDFC Bank or Bajaj Finance. But if you already have, rather if you don't have exposure towards private sector banking names as well as financial services stocks, then it makes a lot of sense to shift to these names because of the way the charts are poised. I also believe that on the other hand, FMCG stocks are at the cusp of a turnaround. So I think Nestle has been something which I've been recommending over the last few days, because my expectation is that the stock is bound to get into a phase of a rally as well as a trend phase, which could probably take the stock back towards 2650, 2700 mark. So maybe the timing as well as the positioning could depend a lot on the construct of a portfolio.
Okay, this one is coming from Janvi Kunal. This one is also for you. She's writing to us from Bangalore. She was allotted 16 shares of Star Health in the IPO. That's way back in December 2021. The stock has actually seen a sharp fall from those levels. She wants to know whether she should average right now or look to exit the counter completely.
See, I would not suggest to average. In fact, if possible, you may look to exit the stock at current levels. And I think if you are sticking to the healthcare or the pharma stocks as such, then I would probably suggest two names which have popped up on the radar over the last few months in terms of a potential long-term breakout. One of them is Zydus Life and the other is Glenmark Pharma. Both of them are looking extremely attractive on the long-term charts, and the prospects for these stocks look very attractive. Yes, these stocks have run up quite well over the last 1.5 odd year. But then when we try to forecast or extrapolate of what could probably transpire in the next maybe couple of years and more, then I believe that the trends could look far more stable as well as stronger for both of these stocks. So potentially you can switch from Star Health towards either of these two names.
All right, moving on. And Avinash, if there's an advice to exit, can she go ahead and buy Canara Bank and HDFC Bank?
Yeah, I think, I think she's made good money in Edelweiss, and I think Edelweiss shareholders have also got the benefit of getting Novama Wealth, shares, which got hyped off separately. So I think I'm quite sure the investor must have made a decent amount of, risk reward here. But I think Canara Bank looks very much interesting if the investor has a 12 to 15 month kind of time frame. I'm also of the belief that PSU banks look pretty attractive and undervalued, and Canara Bank is one of those banks which have got a very strong balance sheet, a very good CASA ratio. Plus, they have a good, housing finance subsidiary in the form of Canfin Homes. So I think here, if the investor can buy even at the current odd levels, one could expect a decent risk reward. So I think a switch to Canara Bank can definitely give a better risk reward, considering that the investor has made a decent risk reward in Edelweiss stock.
That's a quick note for all of our viewers who've written to us asking about Canara Bank. That's the fundamental analysis coming in, where Avinash is giving a thumbs up even at current levels for Canara Bank. So hopefully it will help resolve all of those queries as well. But Avinash, this one is coming from Manisha, and he wants to know if Jio Finance is a good long-term bet for someone to stay put with. He's asking for a target price as well, but I'm unsure if you can provide that. I don't think even Kunal can provide that for Jio Financial. But for the long-term Jio Financial, do you think a good bet to stay with, or look at other players altogether then?
No, I think, Cheryl, Jio Finance has moved up by almost 30% now in the last 1 month. And I think normally when prices start reaching new highs, that is the time when new retail investors start, buying such kind of stocks. So it's not a bad decision to buy. I would suggest that, if the investor wants to take a big position in Jio Finance, let him make a SIP every month and continue this for the next 12 to 15 months. Because as a business, Jio Finance is still developing. It has not yet completely, represented all segments in the market. But yes, the future for the next couple of years looks very interesting. They are going to disrupt the financial services market. But at these levels, I think the stock looks a little bit elevated. So I think maybe any decline in the stock price should be used as an opportunity to buy and follow an SIP strategy. I mean, for the longer term, that would give a better risk reward, for the investor.
Right, moving on, and Kunal, the next query is coming from Vivek, and he wants your advice on Tube Investments. His buy price is 2,700 rupees. His question is, does this have more legs for the rally, or it has topped out at current levels? He can stay invested for the next 1 year.
No, I think it's an interesting chart. It still looks very attractive. Yes, you have to always understand the characteristic of the stock when we look at the charts and the technical structure. And Tube Investment is a very low beta stock. But when you look at the last 5 years and 10 years of trend for the stock, it's been a phenomenal uptrend for this kind of a name. So I would believe that you should continue to hold on to the stock if you have a vision of say 2 years, 5 years and 10 years plus for these kind of investments, because these stocks, they would be a lot more gradual in terms of the returns, but the consistency could also be significantly high. So it depends on your time frame. If you're okay holding on to the next 2 years and 5 years, then I think you should continue to do that for tube investment.
Okay, Kunal, we have RK who's a long-term investor, but he wants entry price for some of these counters which have already seen spectacular rally and have corrected from there on. One is IREDA, SJVN, HFCL and IRFC. Any of the counters that you think it's worth buying right now, and what sort of an entry price should one look at?
So IREDA, HFCL, SJVN and
IRFC.
IRFC. So for IREDA, the chart structures, the chart history is a lot more limited. The 50 DM is just recently formed for the stock, and in this kind of a scenario where the stock was almost at 214, I would expect 140, which is the first level of 50-day moving average, to be retested. That could be a point where you may look to consider buying the stock, at lower levels, but then don't buy the entire tranche at those levels. For SJVN, I would believe closer to 100 should be a double test of the bottom, and I think that's where you can consider buying. So it's almost at 120 right now, so potentially another 15% correction is where you can look to start buying. HFCL on the other hand, I think you can consider buying at current levels. I would expect the stock not get into a major correction. I think at 113-14 levels, it should be good for at least another 20-25% higher returns over the near to medium term. As well as for IRFC, again a retest of the previous lows is what I would expect. So closer to 120, 125 is where I would believe that could be a very good level to try and buy the stock.
All right. The next query that I have, Avinash, is from Netik. He's holding 100 shares of South India Bank from a price of 32 rupees. Can he add more at current market price with a long-term investment horizon, or rather he can make an investment in Trident?
I think he should continue to stay invested in South Indian Bank. I think the bank has done remarkably well in the December quarter. And I think the management commentary has also been very strong. So I would be quite confident that even the coming year, that is FY25, should be a stronger year for South Indian Bank. And I think stay invested here for the next 12 to 15 months. I would not be surprised that we could see levels of say 42 to 45 over the next say 12 to 18 months.
It's come from Chandrasekharan, and he has Ashok Leyland, 1000 shares, Kunal, at an average price of 179 rupees per share. Should he average at current price or wait? He's saying he can hold on for the next 6 months. 179, quite an elevated price for Ashok Leyland, isn't it?
Yeah, but I've not been a great fan for the stock. At least looking at the technical chart structures for Ashok Leyland, the stock I think was in 2018 closer to 167, and currently it's at 174. So when you try and compare this last 5-6 year return, it's been very, very nominal for a stock like Ashok Leyland. I would suggest to make that switch, and I think some of the stocks from the auto pack which we recommended, the likes of Maruti at current levels of 11,500, I think still looks attractive for a good 20-25% return over the next 1 to 2 years. And M&M is also one of the stocks which I've been recommending over a shorter term time period. So it makes a lot of sense to divert your funds to these kind of performing names rather than sticking to Ashok Leyland.
All right, so that's the advice coming in on autos. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking your query. And this one is coming in from Mr. S.K. Saran, who's a 66-year-old citizen, senior citizen. And this query is for you, Avinash. And this one, he's asked me to ask you as well, Kunal, but it's up to you if you want to come in on this query. And basically this one, I think all of our viewers, this is applicable to all of you all. Avinash, what Mr. Saran is asking you is that as one grows older, what is the ratio of equity to fixed income in asset allocation? At present, he's 100% invested in the equity.
No, I think, Cheryl, asset allocation depends upon the risk appetite of every individual. So I think apart from the age, I think, if the individual is willing enough to take a little bit of volatility in his portfolio, even 100% allocation in equity is okay, because ultimately what is the kind of timeline he has in mind. But normally, I think what we would suggest to senior citizens is that you could possibly keep fixed income as 60% and 40% in equities, because considering the kind of volatility and the risks in the market, it's always better to play safe, once you cross the age of 50, 55. So I would say that, typically 50, 55% should be in fixed income and the rest should be equity. That would be an ideal kind of asset allocation.
All right, moving on. And Avinash, once again coming to you. This query is coming from Tushar, and his question is, can he enter Hutco at current levels for a long term? And how are the valuations stacking for Hutco at this point in time? Do you find them cheap?
I think now, as of at the current odd levels, I wouldn't be quite comfortable with the valuations, because this stock is to trade at around 50 to 60 rupees, and now we are seeing it almost at 200 odd rupees. So I think longer term prospects definitely look pretty good, but at these valuations, I think the risk reward definitely looks a little bit elevated. So I would prefer to hold. No fresh buying would be suggested.
With that, let's kickstart with the rapid fire. Let me take Shashwat's query first. Then, Kunal, this one's for you. He wants your view on Indiabulls Housing Finance, 200 shares at a price of 215. What sort of an upside can he expect for Indiabulls Housing Finance from here on?
Near-term upside, you can expect closer to 205, 207 for the stock.
Okay, Kunal, one more query for you. This one is on Jubilant Ingrevia. Namita has these shares and buy price is 470 rupees. Any targets for the next 3 months, and what to do in this one?
Hold on, but keep a modest target closer to 525, 530. Post that, shift to some other large cap pharma name.
All right, this one is coming in from Swati. A couple of stocks she's asked about, but let me take Som Distilleries for now. Buy price is 335 rupees per share. What should she do? She's suffering a loss in this one, Avinash.
No, I think she can average here and take a time frame of at least 12 to 15 months. Stay invested here.
Kunal, would you be able to advise on Tata Technology? Srinivasan is holding these shares from a price of 1155 rupees and wants a 3 months outlook on this.
I think it looks attractive. Looking at the very recent chart structure, would look out for targets closer to 1250 over the next 3 months.
Sanjeev Sinha is asking you, Kunal, 2 weeks ago you advised Nestle purchase price for the long term around 2400 rupees per share. Now what's your advice, keeping in mind the current entry? Do you think fresh entry is possible?
It's possible, and you can now look out for targets at least in the range of 2650, 2700.
Okay, Avinash, what will be your advice on JK Paper? Actually, Alok is at a loss in this one. He is holding 8500 shares at an average price of 416 rupees. What to do in this one?
I think paper prices have started correcting, and I think the cycle seems to be now going negative. So I think on any rise, I think you should exit.
All right, Mr. Deepak from Gujarat, who's a senior citizen, Kunal, has SRF at 2450 for the last 2 years. He's holding 200 shares. The stock is stuck in a range over the last 2 years. What should he do? Should he exit?
Have patience and continue to hold on to the stock.
Okay, Kunal, what will be the target for BEL? Nimesh is holding 250 shares at a price of 183 rupees. I beg your pardon, Neeraj is the viewer's name. What to do in this one?
The stock is not yet overbought on the long-term charts. I would expect at least 225 as a target for BEL over the medium term.
All right, with that we come to the end of the rapid fire as well as the query segment. Thank you so much, Avinash, as well as Kunal, for joining us on the show and resolving all of the queries. And thank you, Kunal, for the BNSN Pashala. Viewers, if you've not taken your query today, don't be disheartened. We'll be back next week, and hopefully you found our query segment useful for all these other stocks as well. But now let's shift focus to Byju's. My colleague Anurag Joshi is here with some key updates from the EGM that is being held right now. Anurag, what's exactly happening there? What is the latest update we are getting with regards to Byju's?
Yeah, so the EGM, which has been convened by the shareholders of Byju's, is currently going on. Sources have told ET now that at least 37 shareholders out of about 170 shareholders that Byju's are attending this meeting. Now, this EGM, which Byju's is terming as invalid because it says that it is violative of the Articles of Associations of the company, is happening. And it got delayed. It was supposed to start at 9 a.m. this morning, and it got delayed due to various reasons. And the investors that have convened this AGM include Peak 15, Chan Zuckerberg Initiative, and General Atlantic. Now, ahead of the AGM, Byju's managed to get an order from the Karnataka High Court, which stated that any decisions or any resolutions that are passed at this AGM will not have effect until the next hearing on the matter in the court, which is on March 13th. Now, Byju's also claims that, one of the founders needs to be present at the meeting, which is not the case. And so that's why they're terming this as invalid.
Thank you so much for that, Anurag, for at least getting us the latest update with regards to Byju's, and we will get you more updates as the day passes by or progresses. But on that note, we are totally out of time on this week's edition of Buy Now Sell Now. So it's a goodbye from our entire team, our producer Boski, as well as Ruchira, our director Santosh, as well as our entire camera team who is functioning behind the scenes. Thank you so much for watching. We'll see you next week.